Hello everyone. First, let us introduce ourselves. We are from the group 64. Our group consists of three individuals, and they are Theodore Jason, Stanislaus Raditya, both from the social major, and me, Jonathan William, from the science major. The three of us have a common interest, and that is stock investing. Some of us already started since 2019, and with all the knowledge and experience we have got earlier, we noticed something phenomenal in this 2020 crisis. This exceptional crisis made us wonder what truly happened in the stock market. So we chose this title, Canisius College 12th grade students' interest in stock investing during the COVID-19 pandemic. To be more comprehensive about this title, let's start with the four elements that intensify our curiosity about the stock market. There are the economic cycle, stock market, the COVID-19 pandemic, and the trading surge. Those four elements are correlated in a way that precipitated a market crash last year and created the uncertainty in the stock market until today. Now let's begin with the first element, the economic cycle. The economic cycle has four phases. There's the expansion phase, when optimism builds up. There's the peak, when the euphoria ends. And going downwards is the recession phase. It is what we are facing right now. And the last one is the recovery phase. It is when the crisis ends and the expansion phase starts to take the lead. The cycle always repeats. Some pundits say that it is happening once every decade, but the good part of the crisis is there will be that long period of prosperity. Maybe some of you already know about the golden age of capitalism or the roaring 20s. Now let's move on to the second element, the stock market. In the stock market, there are also four phases, or you can say emotional stages. There are optimism, euphoria, fear, and surrender. Every emotional stage works similar as the economic cycle. There's an analogy about the stock market called Mr. Market by Benjamin Graham. Mr. Market is considered as someone who offers stock prices every day, like a ticker. And Mr. Market sometimes can be highly optimistic, but sometimes he also can over discount a stock price. For me personally, Mr. Market is a great illustration of the stock market. As we learn about the stock market through Mr. Market analogy and the two cycle, we can conclude that the stock market is full of emotions and very dynamic. So, as the stock market is emotional, trying to understand the market is a big mistake. Talking about emotions, if we look back to the first quarter in the 2020, when COVID-19 hit all the newspaper headlines, there was that fear we were talking about. And that fear didn't end there. People were also concerned about the recession phase, because COVID-19 didn't only affect health issues, but the economy itself also being impacted. That caused the stock market to crash, and everyone was selling their stocks. Let's correlate this with the two cycles we were talking about before. As the crash or after the fear phase, it will be continued by optimism in the stock market and expansion phase in the economy. So as people thought that March was the bottom line in the stock market, they started to buy stocks again. Along with it, the stock market is full of optimism, and it created the bullish market, or in other words, the uptrend. This optimism enhances even outside the stock market. It is very tempting either for investors or someone who has never been investing in the stock market before. So it creates a new phenomenon, the trading surge. For this part, will be explained by my partner Jason.
Hello, I'm Theodorus Jason, and from now on, I will explain about the trading surge in Indonesian stock market. 2020 is the year of the surge of retail investors. Here, I want to show you a line graph that explains the surge. This line graph below illustrates the population of investors that are identified by Indonesian Financial Service Authority at the end of the year began from 2017 to 2020. In 2019, there were 2.4 million investors that were registered, and in 2020, there were 3.8 million investors that were registered. With 56% growth year on year, 2020 had the highest number of growth of investor population compared to a few years before. Additionally, here I want to deep dive to the composition of the numbers of last year investor population. There are two types of investor. First, retail investor, which invest by their own decision, and institutional investor, which invest by their company's decision. Overall, retail investors dominate the composition of investors in Indonesia. 99% of the total investors were retail investors, and 1% of the total investors were institutional investors. In the 99% of the retail investors, 55% of the investors were aged below 30, and the rest, 45%, were aged 30 and above. Thereby, investors under the age of 30 took the dominance of retail investors in Indonesia. Move on, in this research paper, we were doing a research of students' interest in stock investing during the pandemic. Here I want to explain what the word interest means. Interest is the feeling that you have when you want to know or learn more about somebody or something. Interest in stock means someone's feeling when they want to know more about investing in the stock market. Talking about learning the stock market, investor must know about the risk and gain of investment in the stock market. Legendary investor and world wealthiest stock investor Warren Buffett once said that risks come from not knowing what are you doing. It is a reminder for investors to have a wide knowledge when investing in the stock market before investors are hoping for a good return at investing in the stock market. In this research paper, we did a research of Canisius College 12th grade students' interest in stock investing during the COVID-19 pandemic, where there are three main questions that we want to answer in our research. First, what is the background or reasons students invest in the stock market? Furthermore, we are going to deep dive into what are the students' goals, perspective, and specific interests with investing in the stock market. Next, we want to find out why students pick the stock market as their investment. In addition, we are going to find out about what aspect impact students to pick stock as their investment. And finally, we want to find out about the student's psychology aspect when they were investing in the stock market. Next, our research method will be explained by my partner Stanislaus Raditya.
Hello everyone, my name is Canisius College, and now I will explain to you about our research methods. This quantitative research uses Google Form questionnaire with 71 people as the sample. This 71 people is 31% of the whole population. We divide the questions into several groups. The first group is investment background. The second group is stock as an investing instrument. And the third group is psychological profile of investment. In the third group, we divide it into 3 different sections. Section A talks about their emotion, Section B talks about their risk profile, and Section C talks about their FOMO phenomenon, or the FOMO phenomenon. Now I will explain to you about our formula. In each every answer is strongly agree, hesitant, disagree, and strongly disagree has individual points that will sum up, divided by the sample and classify. To find the interval between classes in each group, we subtract the highest points possible with the lowest points possible, and then we divided the product by the number of classes for the classification. The table on the left-hand side is an example of the classification and the equation to find the intervals in each class. And the equation on the right side is to find the final score on each group questions, which is sigma divided by 71. Here are the results. The table on the left-hand side has a final score of 19.845. This score can be placed on the second class, which has the interval between 14 to 21. Now it can be concluded that students, 12th grade students from Canisius College High School thinks that it is quite easy to invest in stocks, and they invest in stocks because it is quite common. And they realize that it has a medium return and also has a medium risk. The table on the right-hand side has a final score of 7.9. We can class this on the top class, which has the interval between 7.4 to 10.09. So it can be inferred that 12th graders from Canisius College High School has a high interest on investing in stocks and has the willing to invest in stocks. Now, in the beginning of our questionnaire, we have these 2 questions. The first one is, do you have a security account? And the second is, if not, will you invest in the stock market? From the first question, 67.6% from 71 responses answered they haven't had a security account, and the 32% has. And the second question, from 48 responses, 83.3% answered yes, and 16.7% answered no. It can be inferred that 32.4% up to 88.7% of the population will be investing in the capital market. Investing psychology profile. The table on the left-hand side shows that it has a final score of 15.5. This can be classed on the second class in the table, which has the interval of 11.7 to 18.39. So it can be inferred that their emotional state is pretty stable. The table in the middle section has a final score of 14.9. We can class this on the top class, which has the interval of 14.6 to 19.89. It can be inferred from this table that they are in the category of conservative risk profile. And finally, on the right-hand side of the screen, this table has a final score of 5.74. This can be classed in the second class, which has the interval of 4.7 to 7.39. So it can be inferred that Canisius College 12th grader has a potential of FOMO, or fear of missing out. To sum up everything that had been stated before, Canisius College 12th grade students are highly interested in stock investing. Their interest mainly caused by their understanding about the benefits they'll get through stock investing. Regarding all internal drives, the stock is quite easy to learn and it is effective for beginners to take the leap of the opportunity. Unfortunately, they have the potential for having FOMO, or fear of missing out, in terms of investing. Thank you for listening to our presentation. Have a great day. Thank you.